Hi, I'm your host Danny Dividends and this is Clueless About Crypto. Welcome dividend trackers to our 17-part series on dividends, which is income just waiting to happen. Our guest is Wayne Smith and he will tell you more about dividends. Let's go.
And I'm glad you could join me. We're going to finish up on the different business structures that are out there where you can get greater than 4, 5, 6, 7% yield or return on your investment, especially when you own the shares. You may have some of these shares and you don't even know they are producing dividends for you. Well, let's find out more about what's left out there. We talked about business development corporations, we talked about REITs, we talked about MLPs. There is also CEFs. Okay, CEFs are closed-end funds. I'm not going to say too much about it on this particular video. I'm going to do a special presentation with Ashley Fields in our group. She's our tax professional, and she and I will team up on doing a presentation on CEFs, or closed-end funds. They're a very special group, and I want you to know more about them. There's also another sector out there that gives us dividends. Exchange traded funds, or ETFs. ETFs are a basket of funds where different stock, according to sector maybe, according to business direction, maybe it's a ESG model, maybe that it's more socially developed companies and things of that nature. They can also be put into a basket of funds, and they're called exchange traded funds, and they give you a dividend. Some of the ones that you might be familiar with, that you might see on the Black Collective, or maybe like Kathy Woods. Kathy Woods has the ARK Invest funds, and so you might notice that they're in robotics, technology, healthcare, things of genomics, things of that nature. So they can be placed into a grouping, and you can buy that ETF like you would buy a share, and it will give you a dividend. We also have royalty trusts. Basically, a lot of royalty trusts are in the oil and natural gas area, and so you can buy those and they have a dividend. There are exchange traded notes. The Credit Suisse family has 4 different exchange traded notes, and they're based on REITs, oil and natural gas. They're based on silver and gold. So those exchange traded notes are actual notes. They're borrowed money, and they're backed by some security. Money is made on those, and then that money is returned to you. Not as much as like on REITs and business development corporations, because remember, they return 90% of the money that they make back to you because you own the stock. Not because you're a nice person, but because they really want to get a specialized tax treatment, maybe pay no taxes for that quarter or that time of year that they're actually giving you that particular dividend. So those are some things to think about. Our last that we will consider is preferred stock. Preferred stock is the better grade, so to speak. It's more expensive, but a company may have preferred A shares, preferred B shares, and then the common stock, the stock that you and I see all the time. Preferred stock is a little more difficult to find because each brokerage will actually put a different code letter or a dash or something in back of the symbol that you already know. So sometimes you have to call your broker if you want to get into preferred stock. Preferred stock is pretty steady. It'll pay between 6 or 7 or 8%, maybe even 9% return on your investment. It costs about, I would say, most preferred stock tracks about 5 to 10 times higher than the common stock price, but you're going to get your dividend first. That's why it's a preferred stock. You're going to pay more for it, but they're going to make sure, the board of directors will make sure that you get your dividend first. And typically with preferred stock, your dividend is not cut, it's not reduced, and it's not stopped. So those are some things to keep in mind. We did talk about a lot here. So our next video will go more in depth with maybe a different subject, something else that we can actually take a look at, and look at certain maybe phrases like don't chase yield, or what's a dividend trap. I don't get into those too much. A lot of groups do. What I'd like for us to do is to focus on a dividend growth income investing strategy that's a hybrid strategy, and I'll explain more about that. The first video that I put out that might be pinned did talk about that. I'll explain more and more about that as we go along. Take care of yourself. Have a great day trading. It's a rough market out there. It can be very tough on you and tough on your psyche, but keep at it. You will do well. You will be successful.